The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 14th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send that to Steve at TFNN.com. Inside that subject heading, please put radio show question. Now, if you're inside our Tigers Den, and you should be, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we begin our day here with a sea of red. You got the Dow down 285 points, S&P 67, 401 for the NASDAQ, 3 points now for the Russell, 72 points for the trannies, 109 for the semis out there. Yesterday we focused on the U.S. having some system problems. Everything does happen for us. In fact, I do have my black background charts up today and changing up the white background charts just a tad, see how it works. But one of the things that we talked about yesterday, because of the issues I was having with my computer, we immediately went into the international markets to take a look at what signals they were having there. And then we spent some time taking a look at the correlation between the NASDAQ 100 and the DAX. And we see a directional correlation that exists, about a 90% directional correlation. They both trade in the same direction for the most part. So if we take a look at the DAX now, and yesterday, which was true, the DAX was just saying, I want to continue to move higher. Now, it was attaining at that stage, it's 1-to-1 A to B equals CD pattern. It had about a 36% retracement. That's that B to C leg. So it's close enough to a 0.382 to say it qualifies as an A to B equals CD pattern. But now what we've got is a bearish reversal candle. So what the DAX is generating for us is a sell the D point top. That would suggest that we would move lower maybe 2 to 4 days out there. What that says is that the NASDAQ 100, we should expect that to also continue to move lower. So we're certainly going to take a look at that. What was that noise? We still see your home screen. Yeah, you should see my home screen. That's what I want you to see, Al. We're all set there. We're looking at the DAX up in the right-hand corner out there. So that's the one that's showing that A to B equals CD pattern to the upside, and that does sell the D point top. Now, we take a look at the screen out here as well, and I had just caught the very end of Basil's show. He was looking at the spot VIX and a 200-day exponential moving average. I haven't used that tool, but I do use the spot VIX index and its 50-day exponential moving average. And right now, price is trading above that. And we'll take a look at that momentarily. But the more important thing out here with regard to the spot VIX is the one-day rate of change. So you can see right now we're at 11.7%. Any one-day rate of change out there, and I'll show you that. Here's a chart with the New York Stock Exchange, or the S&P up top, and the blue arrows are one-day rates of change above 10%. And what you'll typically see, now this is the cash indice. I probably should have really done this chart with the continuous contract of the ES Mini, because it would have shown that we almost always get some type of counter trend move. If it's not a bottom and it's a rally, it's a counter trend move out there. So you want to be paying attention to that. If we get that, then the rule is to start taking a look at really the 30-minute time frame charts for the equity futures. They'll typically generate the bottom signals when there's going to be that rally attempt. Now, that doesn't mean the rally will succeed, but you want to watch at the end of the day the spot VIX index. You want to be paying attention to the one-day rate of change above plus 10%, one-day rate of change below minus 10% out there. With regard to the 50-day Out here, if we take a look at the New York Stock Exchange, we'll just switch over to my white background charts. Did I put that up here? I didn't, but we'll just simply populate it right now. We'll take a look at the advanced decline oscillator, which I would imagine is below zero, but maybe not. We'll find out here. But the spot VIX, you're going to see well above the 50-day exponential moving average. Once that populates, there you go. So you can see that. Now, where could the VIX be headed to? Well, it could be headed to its TD9 count breakdown resistance level up at 2368. Am I saying that's where it's going? Well, I am saying as long as price stays above that 50-day exponential moving average, odds of a further move higher are there. Wow, this is really interesting. So be careful on the short side. Really interesting. Look at this market breadth. So this is New York Stock Exchange. The bottom panel here is the advanced line oscillator, showing us the difference between the 1939 period exponential moving average. I didn't expect to see this above zero, and it is above zero. It is strong market breadth. Look, yesterday, the advanced decline line, well, we even mentioned it, the day before it did the same thing, but yesterday was another new all-time high, in that there is plenty of market breadth out there. So it just says be careful. Now let's go take a look at the daily equity future contracts. They were trying to, 3 of the 4, were trying to attempt to form a new profile out there. And I see that the ES Mini profile has gone away, the NQ has gone away, but the Russell still exists out here. The Russell has shifted, but it still exists. So in the case of the Dow, no topping pattern out here. Just simply there's an A to B equals CD pattern that is still in effect. That'll remain in effect, really, quite frankly, unless price closes below that B point out there. Price is pulled back, and it's testing a key area of support right now. That's 69.23. You can see that this was a bearish structured profile. Price was above a bearish structured profile for more than 2 consecutive sessions. When that unfolds out there, what that tells us is that if it's only a counter trend move to the downside, price will find support in that zone being 68.79 to 69.23. First thing to pay attention to. It is the same setup inside the NQ. Now, the NQ is a little bit more meaningful from the standpoint that it still has 2 tops out here. It's got a TD9 count top from back in December, and it's got a TD9 count top that set the all-time high back in October out there. So it's got topping signals. Price, though, still the same play in that it has a bearish structured daily profile. Price was trading above it for more than 2 consecutive sessions, and therefore counter trend moves would come to an end between 25,382 and 25,629. In essence, where we're trading right now. I'm not saying right now is the bottom. We'll have to go take a look at the intraday charts. And if we take a look at the Dow Equity Future Contract, it also has an A to B equals CD pattern to the upside. Price here trading below its oscillator and change line. It also has a bearish structured daily profile. So where its counter trend rally would come to an end if the move to the downside is only a counter trend move. And right now, I'm saying that's what it is. However, the spot VIX says caution with regard to that statement out there. But still, that's what I'm saying this is at this stage in time. No levels of support or key levels of support have been broken. In the case of the Dow, that would be between 48,702 and 48,894. Now, when we take a look at the Russell 2000, we'll just simply expand this chart out here. Maybe easier for maybe not easier for you to see the new profile, which is really what that was all about. So those of you that are trading the Russell 2000, you've got a new profile, looks relatively solid. The top is remaining the same, which is 2661. So that's where the sellers exist. That the support right now is down at 2565. So fairly wide range out there. The only issue you have if you're long the Russell 2000, if we see a close below that oscillator and change line, that assumes at 6:01 tonight this profile gets confirmed. If you get a close below that 2618-ish level, we're likely to see 2565. So everything looks good right now, and it is. We'll just have to watch price. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So I flashed up my intraday charts here for the ES Mini, and the profile has reappeared inside the ES Mini. And so I'll just simply go ahead and open up this so you can take a look at the daily time frame chart out here. And what's interesting about this is you can see profile support is 69.26. It says 85, so 75 would be the number. And the actual low today is 69.2650. So at this stage here, look, I use the data as long as the data is available on our screen out there. And so price has pulled back to a key level of support, that 69.26 area. Both bullish and bearish, you want to be paying attention to that. Now, it may vanish at day's end, but you can see the old profile wasn't, the top of it wasn't too much below that. But it just changed. If this new profile forms, then you can throw out everything I said about the ES Mini and where that counter trend move would come to an end out there. Instead, you'd really be focused on that 69.26 level. Now, when price gets back to a daily area of support, we look for some intraday bottom patterns out there. Right now, the only bottom pattern that we've got is on a 10-minute time frame chart. It's got a Rhodes Momentum Indicator bottom. So we pay attention to this chart. This chart suggests that price should rally up towards 69.44. That's its oscillator and change line. If it can get above that, 69.48, and above that, 69.57. Those would be the levels you'd be watching. The only other bottoming signal that we have at this moment, potential bottoming signal, is coming from the 4-hour time frame chart, which has a TD9 count that is going to go ahead and confirm at 2 p.m. and it'll complete at day's end out there. More likely, it's the day's end. Maybe we continue to head lower out there. We have that one-day rate of change, and you get that nice, for those of you that are intraday traders, so you trade both sides out there, that could set up a nice move to the upside, nice little rally out there. Last thing, and I'll start getting to the request out here because I'm going to get behind where because I can share that. Is the seasonal chart. So just to repost this is the month of January. This is for the S&P 500. This is for the last quarter of a century out there. And this is the seasonal pattern associated with that. And that seasonal pattern suggests that you would get a top right around December the 12th. Well, in essence, 12th, 13th, we may have done that. And this then suggests that we run lower into the 20th, 21st, or maybe even into the end of the month out there. So that's the seasonal pattern for the S&P 500. We'll continue to pay pay attention to that. And as well as now, if that pattern is going to unfold, we're going to see price close below 69.26. Somebody might have asked the question, well, how do we know if that's going to unfold or not? The first thing is we'll see a key level of support fail. That's at 69.26 area. So now let's start getting to the requests that have come in out there. Otherwise, I'm going to get way behind. We're not going to finish them, and I don't want to do that. So that first request coming in yesterday from Vic, and the question was, I believe, want to take a long position in Gush. So Gush would be like a 2-time or 3X out there. So what I'm going to show you is this is the oil and gas sector out here. I'm going to show you the XOP. And your question is it a buy? So let me share with you what it is doing out here, the XOP that is. We've got a nice rally today, in the face of a market that's moving lower. And this is suggesting because we closed above the top of its daily profile yesterday. And I would say because we're trading above a swing point from January 5th right now. And as long as price closes above that swing, that's 131.85, we're likely to head all the way up to 135.64. So that becomes your first price target to the upside. If we look at the weekly time frame chart out here, the weekly time frame chart shows pretty much a sideways consolidation, that's been in effect since the early part of summer, the middle of the summer out there. I don't have anything to suggest that pattern is going to go away, but right now your next level of support out here, Vic, is going to be 134.64. That is going to be the center of its weekly profile. And if price get above that, then you've got a 141.50 target. You're going to have to do the risk-reward calculation to determine whether or not it's worth taking that trade. This is going to be day number 3 to the upside. So you're likely to get a fourth day and then maybe a 2-day retracement or something along those lines. And the monthly chart, Vic, shows you that sideways move. Sideways move here shows that we've really been in that pattern since June. I say, okay, since summer, since June of 2025. So nothing to suggest that we're going to break out of that, but that's your trade setup out there. It is likely to rally, but I'd say it's likely to rally maybe for one more day before you get a bit of a pullback out there. No guarantees on that. Tony wants to take a look at Ethereum. So I believe that's still the January contract. Let's go ahead and put that up on our screen out here. That didn't work. So yesterday when we were doing this, and I just had the one chart up and just a very few things, these charts seem to populate pretty quickly, which is one of the reasons why I went ahead and kept my black chart up here. Of course, now that's proving to not be the case. Why that is, can't tell you, but it was worth a shot for Stevie. So Ethereum is coming up. This is for Tony. And Tony, right now, Ethereum is trading above the top. This is a January contract, trading above the top of its daily profile. That's at 33.26. So its next target is going to be 34.8850. That is the TD9 count breakdown resistance level. If price can close above that, then you're going to head higher. Head higher to where? Well, the next level of resistance would actually be up at 42.23, and that's coming from the weekly time frame chart. Now, that was the January contract for Ethereum out there. So, Tony, I hope that helps you out. You also have interest in taking a look at ticker symbol BMNR. So let's get that up on our screen out here and see what that is doing. BMNR trading out as we speak at, I thought I was going to time that. Nope. Okay, it's trading out at 33.62. It is trading above the top of its daily profile. It pretty much has also been in a sideways consolidation out here, and it looks like price wants to go make a run for the top of that consolidation, which would basically be its TD9 count breakdown resistance level at 40.13. That's the daily time frame. The weekly time frame says, well, I've got a couple different resistance levels for you to deal with. One is at 34.61 and the other is at 38.72. So I don't necessarily think that it's going to be a smooth ride up to the 40.13 level, but everything here is pointing to that is a likely outcome. And that includes the monthly time frame chart, which is traded above its green oscillator and change line. So everything here is pointing to a further rally out there. The first level of resistance now is going to be that 34.61 level. We're trading at 33.81. You also want to take a look at SANA out here. So let's pull that set of charts up. SANA is, maybe there's a couple other things I can shut down, but SANA trading out right now at $4.82. It's trading above both its green oscillator and change line and the top of its profile. That's a bullish signal, and that suggests that it should rally further. We're just waiting for the weekly chart to populate. The weekly chart is giving you that same signal. Price is trading inside a bullish structured profile, but above its green oscillator and change on at 460. As long as that condition remains, price should rally up towards 619. The daily is going to go target its TD9 count top. And that TD9 count top went ahead and formed on December 4th, and that high is going to be 549. Now, the swing point volume on that was 11 million shares. Yesterday, you were up into it with 2 million shares. Today, so far, we're in it with 800,000 shares. So light volume as you make that move to the upside. But the daily, the weekly, and even the monthly chart, which is just trading with inside his profile, but it's above the center of that profile, is suggesting that this should rally further. Now, today is going to become day number 4 of a continuous rally, of continuous higher highs out there. So it's also suggesting that you're getting ready for perhaps retracement. And I would say, Tony, that retracement, I'd be looking for is move back to that oscillator and change line at about $4.50 out there. So hope that helped you out with all of your requests, and thanks for waiting a no, it wasn't. No, I got your. That was this morning. Your request came in this morning. John has asked the question: has Smucker's bottomed for its quarterly and yearly chart out there? So I went ahead and prepared those charts to answer John's question, and we'll pull those charts up on our screen. The left-hand side is going to be the yearly chart. So on the yearly chart out here, what you can see is we have had 3 consecutive years to the downside. Curious question for you. How many consecutive years since the Dow formed back in let's call it the 1876 level, how many years in a row to the downside have we had? Consecutive years to the downside. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. The answer to that question was 3. It was 1929, 1930, 1931 out there, when we had 3 consecutive closes. We've never seen that in the Dow again. So the reality is buy and hold isn't really such a bad strategy, right? Especially if you're young out there. Yeah, absolutely. That's what the Dow says, going back, over 126 years out there. In any event, let's get back to Smuckers out here. The answer to your question, we've had 3 consecutive years to the downside out there. We got back to prior swing points. Is there a bottom pattern? I'd say, yeah, that's pretty close to a bottom pattern. And you asked about the quarterly chart, and that's the next one. And on a quarterly basis, this has a TD9 count bottom. That TD9 count bottom went ahead and completed last quarter. That was December out there. And it was doing that right at its TD9 count breakout level at $97.28. We can see that Smuckers on a quarterly basis is now back inside its profile, and as long as price remains above 103.28, we're likely to rally up towards 117.44. So the answer to your question, John, is from a quarterly standpoint, I see a bottom, and from a yearly, we're going to surmise that 3-year move to the downside, that was the end of it, and it is ready to rally from here. So I hope that helps you out. Thanks for the request. Let's go take a look at Marvell. This is for Duncan Steve. Give me a second. I got to get back to that set of charts out there. I should have set this one up ahead of time. What was I thinking? I wasn't thinking. MRVL. I was reading. I wasn't thinking. All right, so we take a look at Marvell out here. Let's get this chart populated. And thanks for all the requests. There's a ton that have come in. So this is going to be easy just for me to, stay on top of this here. Let's get these charts here to populate already. Come on, give us Marvell. There we go. Come on, populate it. Oh, I can close this other chart out here. Let me just get this off my screen. Okay, so we take a look at Marvell, Steve-O. This says to me we are trading below the red oscillator and change line, below the bottom of its profile that formed yesterday at 83.29. We're headed to $78 even, Steven. $78 is the TD9 count breakout level. Bar number 6 today. Maybe over the next several days, early next week, it forms a TD9 count bottom. Let's see. Now, if $78 fails, and you want to watch, price right now is getting close to testing its swing point. Yeah. So the top of the swing point, which was the TD9 count bottom, November the 21st out there, 78.92, 16 million shares traded. We're moving towards it right now with 5 million shares. So we're at a 16 million type share day out there. If we close inside that swing point with volume and close below $78, then we're going to go target the low of that swing, which is 73.62. The weekly time frame chart has a wave 7 top out here, and now it looks like it's getting ready to try to form an A to B equals CD pattern to the downside. The B point for that A to B equals CD pattern has 72 million shares so far the week. We've done 24, so volume would really have to pick up, but whether it's confirmed with volume or not, it still becomes an A to B equals CD pattern to the downside. It looks sort of like this. I'm just simply going to go ahead and move this over. And what this is telling us is that price here, if we lose $78, we're going to get down to the 71.41 level. That's going to be the top of its weekly profile. That's on Marvell. The monthly is consolidating with inside its profile, so it's not suggesting that price should do anything other than, at this stage here, follow the daily chart, which is dead lower. Now, the daily swing point has volume. That's from the trading day of December 17, 16 million shares. And again, we're at 5. So on a daily basis, you're going to maybe get a confirmed A to B equals CD pattern to the downside. You also want to look at SLS. So let's get the SLS charts up on our screen out here. See what those are doing. So, Dunk, I hope that provided you the information you were looking for there. Let's see what the SLS charts here are showing us. Had one heck of a rally, that's for sure. Trading out right now at about $4.05 and with inside its daily profile, and that is a bearish structured profile. That bearish structured profile has resistance. Yeah, I know you got a low amount of memory. Got it. Is between 389 and 415 out there. If you close above 415, we are likely headed higher. If we close below 389, we're likely headed lower. And that's really what comes down to. The weekly time frame chart isn't assisting us here. It's just waiting on the daily to do its thing. The monthly looks very bullish out there. The weekly, though, doesn't have a sell the D point top. Was last week a sell the D point top out here. I'm going to simply expand this out. And it's kind of pretty awkward one, but we'll say that it does at this stage here. I still believe with regard to SLS, what's driving the ship here right now is the daily time frame out there. So watch the profile levels out there. You did have 4 consecutive days to the downside, a 2-day rally, again running into resistance. Looks pretty good out there, but just pay attention to the profiles, I would say. We have a request to take a look at CTRA. This is for ELO inside the Tiger's Den. We'll get CTRA up on our screen, see what this is doing. Come on, baby. Go ahead and populate. There we go. So you got a brand new profile out here, ELO, to take note of. Support is at 24.88, resistance up at 25.69. I see an A to B equals CD pattern to the downside, never completed at that stage, so it's still perhaps in play out here. Just got to see how price deals with the profile. So you've got resistance at 25.56 and resistance at 25.69. Weekly time frame chart says you have resistance at its oscillator and change line, which happens to be priced at 25.45. So you can see you're kind of going into a cluster of resistance. And on the monthly time frame chart, it's 25.77. So this is trying to battle that resistance level, that resistance zone, ELO. And therefore, if price can get above that, and I'd say above that means closing above the 25.69 level, then we should rally further. Until that time frame, so we had a B point on a daily time frame that was back on December 16th. The volume there was 9.5 million shares. We closed below that B point with 8.9, 9.7. So there's a daily confirmed A to B equals CD pattern to the downside inside of CTRA, which is really just, kind of just confirming what we really already took a look at. That one-to-one price target around the 23.83-ish type area out there. So that's what I see, ELO, with regard to CTRA. S&P inside the Tiger's Den wants to take a look at coin, Alberto coin out there. No. I coined the ETF, and for a possible entry point. So let's get its charts here to skedaddle. Come on, get up there. Populate for us. You got coin that is traded above the top of its daily profile. So the very first thing, S&P, this wants to rally up towards 278.20. This is going to be day number 3 to the upside. The most recent rallies we've only seen 2-day rallies. So maybe this is telling us you either get a 4th day and then maybe a 2-day pullback or something out there. You're looking for an entry point right now. Resistance out here is 278.20. That's probably likely the price target. I don't know that you've got the right reward risk at this stage here, but maybe on a pullback, you would. Again, support out here is the 237 to 243 level on the daily time frame. On the weekly time frame, a bullish reversal candle this week would confirm a buy the D point bottom pattern. Price is trading with inside a new profile. It's dealing with a resistance level right now, which is at 261.03 or 261.14. If we can remain above that 261.03, that increases the odds of a further rally. That further rally on a weekly time frame has resistance between 274 and 278. So we can now conclude that I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're looking at coin as we went into that breakout there. The daily time frame was suggesting a further rally. The weekly time frame as well, but dealing with that resistance of that profile level. The monthly time frame had a sell the D point top, pulled back to its buy zone for its profile, which is between 172 and 233. So everything here looks to be a bottom inside of COIN out there. So hope that helps you out, S&P. As far as the entry, probably great to get it on a 2 to 4 day pullback out there and watch those support levels that we were looking at. Tom C wants to take a look at PATH. So let's put that up on our screen out here. And the question is this telling us that we're headed lower, basically? So let's go see what PATH is telling us. The only problem with the white background charts, it doesn't tell me, what the instrument is, and I can't remember every single one of them, unfortunately. And so sometimes we put up something like this. I have no idea whether it's actually an ETF or it's an individual stock. So I'm going to go right now with I don't know what it is. But here's what PATH is doing. Your question is it headed lower? And that question we can easily answer. If we take a look at PATH on a daily time frame, it forms a TD9 count top. It does that on December the 8th. And now we are trading below profile support at 1598. We've already closed below one profile, so this is the second profile out there, and we may be forming an A to B equals CD pattern at day's end. If price is able to close below the January 2nd low, that low for PATH is $15.49. There were 44 million shares that traded that day. So far today, we are at 12 million shares. That's a 36, 40 million share day out there. So similar type volume. That A to B equals CD pattern, let's just go ahead and draw that in here. We're just simply going to move that A to B leg over to the C point. We're going to try to do that. Come on. There we go. And that's going to take us basically back to its TD9 count breakout level. The 1-to-1 is around 1352. The TD9 count breakout level is 1308. The daily time frame, that's where price is targeting. Is there any other support before price gets down there? Well, that only other support that I see right now in the weekly time frame is at 1386. That would be the basically the top of its buy zone. The buy zone is between 1311 and 1386. The monthly time frame is the only one that could stop things. What I mean stop things is price closed above the top of its profile, which is 1528. We're at 1538. So the number to really be watching is 1528. If we close below 1528, start trading below 1528, then the daily A to B equals CD is likely to come to fruition, and we head towards that 1308-ish level out there. So does that look out below? Well, it does say we are headed lower out there. there, Tom. So I hope that helps you out. We've got Sat P wants to take a look at Double Dog or something like that. Data Dog, probably Data Dog, I think it is. DDOG out here. So let's get that set of charts up on our screen, see what they are doing out there. Come on here, populate. So it's got a Rhodes momentum indicator signal that needs a bullish reversal candle to confirm a bottom. So I believe you're looking for, you want to take an entry into or add some shares. So on a daily time frame, I see us in wave number 7. That's letter G. That needs a higher low. But because we've got the Rhodes momentum indicator signal out there, Sat, I'd rather see a bullish reversal candle. And I'd sure like to see it close above that oscillator and change line, which is currently 127.57, to give you that AOK signal. The weekly time frame shows we're trading below breakout support at 126.25. We're in bar number 8. That says we're likely to get a bottom between this week and the next 2 weeks out there. How will we know? Well, I think the daily would give us that first signal. The monthly time frame, we're trading with inside profile, trading below its green oscillator and change line. This says we could be targeting the 111.12 area. So on the Data Dog, you're going to be patient. First, watch for that daily bullish reversal candle, and then maybe right back. Let's take a look at it, see what the weekly and the monthly charts are doing as well. You also are interested in HubSpot. HUBS is a ticker symbol. So we're going to get those charts up on our screen. And I think it's the same thing, looking for an entry area to maybe buy a few shares. You can see that today, price has triggered a Rhodes momentum indicator signal, and today is going to become bar number 9 of a TD9 count pattern. That says the low could take place tomorrow, and you then should get a rally. Now, that rally would run up into resistance, and resistance here, first resistance level is going to be where old support was, which held yesterday and has failed today, 356.85. That's the first level. Second level, 370 and change, the oscillator and change line, and above that, profile 377.99. Those would be your upside battleground areas out there. Because you've got that Rhodes momentum indicator signal, I'd like to wait at least another day. You'd love to see a bullish reversal candle. That would be the better pattern if you could get that out there to take a long position. The weekly chart looks basically horrible. I see an A to B equals CD pattern to the downside out here. Let's go ahead and draw that in. At least the A to B point out there. I just want to see where we are at in that stage. Let's move this over to that C point. No, we're quite a ways away, I believe. Yeah. So no A to B equals CD pattern. That would the initial price projection 267. Monthly time frame chart is a TD9 count bottom. Our price really testing that level, and that level says if we were to close below the low from November of 2025 out there, that's 344.41. We negate that signal, and we are likely to head back to the lows from 2022 out there. So HubSpot's got a bit of work to do, daily, weekly, and even monthly potentially out there. So I hope that helps you out, Sat. You also, nope, that was the end of your request out there. But Dan wants to take a look at AGEN. So let's get those set of charts fired up on our screen out here. AGEN. Oh, come on. Put in 2 E's. Come on, Stevie, learn to type. Fat fingers. Although I'll say they're not as fat as they used to be. All that weight I lost. All right, so AGEN out here is trading at, nice rally out here. $4.71 up above prior swings that I'm looking at on the daily time frame. This is going to be a number of days in a row, 5, 6, 7 days in a row, bar number 8 of a TD9 count, Tano. So we're likely to get a TD9 count top that takes place, that forms between today and Friday out there. And then what should take place is we should see a retracement. Now, the retracement target would be 407. But maybe it's just a couple of day retracement. We got this strong move to the upside. Let's look at the weekly chart. Weekly chart shows that price is finding resistance at the top of its profile. The top of that profile on a weekly basis is going to be 464. We're at 468 right now. Daily TD9 count likely. Weekly hitting this resistance level here at 464 out there. So in the monthly chart, nothing here really in a monthly for us to take a look at. So where do we end the end of the week out there? If we close above that 464 level, that would be good. That doesn't mean that we won't get at least a couple-day pullback out there. We may not get all the way back to test support, but that's what I see with regard to AGEN, so I hope that helps you out, Dan. Mohammed wants to take a look at Kymer. KYMR is the ticker symbol, so let's get that up on our screen out here. See what this is doing. KYMR. trading out at, oh, you're most welcome. I guess we get to it. So we got Keimer out here. KYMR, trading below the bottom of its daily profile. Had an A to B equals CD pattern to the downside. It doesn't look like it completed, but my eyes could be misleading out here. We don't want to trust my line eyes. We want to trust the actual numbers out there. And no, it did not complete that A to B equals CD pattern. So you've got an A to B equals CD pattern to the downside with price trading below its profile level. Let me put this back out here. Gives you a price projection somewhere around the 60-48 type level. We come back from this break. We'll finish taking a look at KYMR, AMLX, Microsoft, and maybe Palantir as well. I'm going to go ahead and fire up those other screens. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back. We're looking at KYMR. This is from Mohammed. We're going to discuss the A to B equals CD pattern to the downside on the daily. The weekly time frame, next level of support is going to be at the 68.80 level. That's the top of its profile. The monthly chart looks bullish. So this may just be a short-term thing that you're looking at out here. And right now we'll leave the 80, as long as price remains below its weekly oscillating change line on the daily profiles, it suggests that it wants to move to the downside. Let's go take a look at AMLX for you as well. AMLX is trading out as we speak at $13.44. The weekly chart says it's got resistance up at 1404. That is its oscillator and change line. The daily time frame has a bullish profile change in trend. That suggests that this wants to rally up towards its CD9 count breakdown level, 1506. So we got one call for 1404. You get above that, we're headed up to 1506. The monthly time frame chart shows that price is traded above profile resistance at 1058. So the monthly is no problem at all. Just waiting so again, this should rally. Whether it takes out that 1404-ish level or not, or 1506, that I don't know, but this should rally further. Vic is asking, is Microsoft to buy MSFT? Let's go find out and try to answer that question out here. So Microsoft right now trading out at 461.60, and we look at that daily time frame chart. The answer to your question is no. We don't see any kind of a bottom. What we do have, though, is we have a Rhodes momentum indicator signal that is present, and therefore, if we get a bullish reversal candle, Vic, that would be your buy point on a daily time frame for Microsoft. On a weekly time frame, prices trading below a swing point from the week of November 28th, 102 million shares. So far for the week, we are at 61 million shares. Dangerous. That is suggesting that Microsoft has got much further to go to the downside, because that would then trigger a weekly A to B equals CD pattern on the downside. Let's pull that over to, that would say down around the 408 level. Monthly chart, we're trading below profile support. That suggests we head lower as well. Folks, thanks so much for joining me today on Wonderful Wednesday. That's what I want you to have. But please join me again tomorrow on Terrific Thursday, 11 a.m. sharp. I want you to have a wonderful day out there, and take care and be safe.